Good morning, TCG. I wanted to start out the day with some correlations looking at the semiconductor sector. I have found some correlations among the charts I wanted to share, and then we got a fly in the ointment, one that doesn't really fit in that I wanted to also draw attention to. Let's start at Soxl. This is the ETF for semiconductors. We have a head and shoulders pattern and we have bear divergence. So you can see that the bear volume is increasing. On these bear candles, they're higher than the bull volume, and here's the divergence in the head and shoulders pattern. So if it breaks 117.31, then we have confirmation of this head and shoulders pattern. I saw this pattern on FinViz and it made me go look at more semiconductors. I would say the cleanest pattern we have to look at with the semiconductors is MU. MU, we have a bearish rising wedge. It is not confirmed yet because it has not broken down. Let's see. So if it were to break 50.10, that would be a break of resistance and confirmation of the rising wedge. So we have support of 50.10. We have resistance of 64.66. This is a pretty clean pattern to watch. It's a rising wedge. It could be, argued to be an ascending triangle. So you can see the bull volume is declining. We have bearish divergence. So just keep your eye on MU. On is a head and shoulders pattern as well. On is a semiconductor we traded last year. If on were to break support of 21.45, we would have confirmation of this pattern. And we have resistance at 25.05. We have decreasing bull volume. We have earnings on July 30th, which may lead to the breakdown or confirmation of this pattern. And we also have bearish divergence. NVDA, we have a strong channel. It's not technically a wedge, but it's definitely a strong channel. They have earnings on August 16th. A breakdown of this channel would be loss of $233.26. A bull breakout would be $259.66. These are all weekly patterns, by the way, these last four charts, which means they're very strong. And we have bearish divergence as well on the RSI, and we have extreme declining bull volume. And finally, the fly in the ointment. Here's our bull. Here's our semiconductor bull, AMD. We've got a cup and handle. We have resistance at 17.34. We have support at 16.02. We have declining volume overall, but that is typical with a cup and handle pattern. So it'll be interesting to see how this one plays out. And just for fun, let's look at the depth of the cup. So the depth is 17%. So if we were to get a breakout above 17.34, our measured move would be 17% above the $17. I'd take that. So with a cup and handle pattern, you can expect the depth of the cup to be the price target or measured move above the bull break confirmation. Just a fun fact. And their earnings are July 25th, which could be the catalyst to get it to break out. So that's it for me this morning. I hope y'all have a wonderful day.